So there's absolutely no doubt that right now real estate is going through a major shift and transition. You hear that word shift a lot. What the media will tell you is that the sky is falling, home prices are crashing, and that real estate is in shambles. So I'm here to give you a complete breakdown of what's going on nationally and also in our local market in the South Sound of Washington. I'm Aaron Thomas with the Aaron Thomas Home Team, where we help people make wise decisions buying, selling, and investing. So join me for a quick update. So the biggest thing is the interest rate, right? So if you know anything about what's going on right now, interest rates have been on the rise. So right now we're sitting at right around 6%. Okay, so if we're thinking back in it was December and you were looking at rates in the 3 and now it's 6, it's almost double. It has people really apprehensive. So keep in mind that demand for housing was historic when this happened, okay? And it's still borderline historic, but what's happened is we've seen a pullback. So we've seen some buyers just kind of come out of the market, but prices are not falling in most cases. So keep in mind that home prices were rapidly increasing. So we're talking to the tune in our area of almost 20% annually. So what we're seeing now is some pullback of that. So some deceleration is the term. So not as quick appreciation, if that makes sense. But for now, statistically, it's still going up. Keep in mind, real estate works in cycles in terms of when somebody buys, when they go pending, and when a house closes. So what we're gonna do is we're gonna continue to look at this data as it rolls in. The thing on everybody's mind is what's gonna happen with this rate? Interest rate, the borrowing of the money, the expense of borrowing the money. Is it gonna keep going up? And for that, I don't have a crystal ball, but what you're gonna wanna do is look at the 10-year treasury. The reason for that is, check this out. For almost 50 years, the 30-year mortgage rate has completely mirrored and moved in unison with the 10-year treasury yield. So the best predictor of the future is to look at the past, right? So knowing that it typically mirrors and moves in unison, the best predictor of the future is to look at the past in this case. So we want to know what's going to happen with interest rates. Look at the 10-year treasury. So I don't claim to have a crystal ball. What I do is listen to the people that are insiders in the industry. So this is a quote from the chief economist of the Mortgage Bankers Association. And what he says about mortgage rates is mortgage rates are likely to plateau near current levels. The financial markets have attempted to price in the impact of Fed actions over this cycle, and they are likely also pricing in the economic slowdown that will result. Once we are past this rate spike and associated volatility, Mortgage Bankers Association expects that potential homebuyers may be more willing to re-enter the market. So what this tells me is that rates are plateauing. We need consumers to actually understand that this is right now the new normal and get used to this so that they get more comfort re-entering into the buying process. And keep in mind, only a small percentage of these people actually dropped out. And that's why we're not seeing wholesale drops in the home price values. And right now, all the data backs that up. So the biggest question is are we in a correction? Is this a housing market correction? And the answer right now is no. A correction, by definition, is a decline of 10% or greater in the price of a security, asset, or financial market. So right now, we're simply not seeing this. In fact, the chief economist of Realtor.com says that the housing market is at a turning point. We're starting to see signs of a new direction, but the ball is still in the seller's courts in most housing markets. I can tell you locally, this turning point, we can see it. It's showing up in the data, like I said. So showing up in the amount of showings at properties and offers. So every time a realtor goes into a house, this is recorded on a key box typically. And so if you check out this slide, this shows us the actual data of the amount of people, the amount of realtors showing houses, and that this showing activity is down. So if you look here, everything in blue is basically the last 2 years during sort of coming from the pandemic and then coming to wherever you consider us to be now. I don't know if we're out of the pandemic or what, but if you see all of the, if you see on the very right, if you see the green, you can see that this very initial stage of a decline in the amount of people accessing key boxes and showing properties. So as these numbers turn a little bit, it's important to understand context though. So the average days on market remains super low throughout the country, really. And the amount of offers still remains strong in most cases overall. So knowing all this, here's what should happen next. The biggest part of the interest rate hikes should be behind us. Now, we may see some more, but we should not see another 3% on top of what's already occurred. Homes are going to continue to sell. The average days on market should go up a little bit, but the homes should generally still be able to sell. And what we should see is this historically low number of homes on market begin to take an increase, okay? It's gonna start inching up. Another question that's on everybody's minds is a recession, right? What happens, what's going to happen when we slip into one, or if we're already in one, depending on what you believe. So the National Bureau of Economic Research defines a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. So it's natural to think recession is going to mean that the housing market is going to collapse in most areas, right? It's only logical. So again, the best predictor of the future is to look at the past. A recession doesn't always equal a housing crisis. So let's look at the last 6 recessions and what happened with housing. As you can see, in green, there was significant home price appreciation 4 out of the 6 times. In 1991, there was a nominal small decrease in home price appreciation. But other than that, 2008, that recession was the only time that resulted in significant decrease in home price appreciation. And this is why most out there are saying that even if we slip into a deep recession, they're not anticipating a huge drop in the home price appreciation or values of homes. In fact, in 2008, when we did drop significantly in home price values, it was actually caused by a housing crisis. So again, we always got to look at the facts here. The fact is that the only time we've had significant decline in house values during recession was a recession that was caused by a housing crisis. And that's why most experts right now are not predicting that a recession will cause a major drop in home prices. So for those of you in the South Sound, I do want to go over the numbers though, and I'm going to be really brief because we went really hard and really long on the national numbers. So the amount of new listings, virtually the same, what we should expect. A slight increase because we're heading into that time of year where the peak of the home sales, the homes listings occurs in June typically. The biggest change is if you have some of the buyers kind of just park their searches, maybe they don't qualify for what they were looking 3 months ago, and price is going to be the number of homes that are on the market. So, and we're seeing this now. If you look at this, the active number of homes increased by 34% in the last month, but it actually increased 75% over last year. Remember when inventory was super duper low? Well, it's still low, but it's improving. This has given buyers new hope. We're having a lot of people write, instead of fighting and making multiple offers on several properties, they're actually getting into the first house that they write an offer on. So again, activity is good. If you look at the amount of pending, it's went up 10% in the last 30 days. But if you look at it, again, less people getting accepted offers. So that number of pending actually decreased about 7% from this time last year. But all in all, it's healthy, like I said. So the number of sales is up 18%, the actual ones that closed escrow that are sold. And it is the same as last year. It's literally a 1% difference. So the same amount of people are actually closing on homes this year as they did last year. So all this worry and fuss is over nothing. So another big difference is the amount of people, like I said, that are going through and looking at the houses. So the amount of people that are viewing each home before it goes pending is actually decreasing, and that's showing up statistically now. So that dropped, and it is much lower than last year. So 18% decline, again, not huge, but it's still less people going through the properties. So the average list price to sale price ratio has been about 104, which is 4% over the asking price. So homes listed for 500, selling for about 4% above. Now these numbers are trailing, meaning this activity occurred in the last 60 days. Now I expect these numbers to change a little bit, and I expect them to decrease. In this past month it started, so it went down from 104 to 103.9, not a big change. So we should see this number continue to go down. All right, and the actual proof, the proof that the homes prices are not dropping yet. Okay, so people are listing, and yes, they're having to drop the price sometimes to sell the home, but we got to look at all the numbers combined. And right now, statistically, the average sale price in Thurston County went up. So it actually increased. So it's currently sitting at 574,866. So it was going up, and 60 days ago it went up 23,000. Now it only went up 10 again. So home price appreciation, but deceleration of that. So a slower pace. So not a wholesale drop in house values. And for those of you that own a home, it's still up 17% in the last 12 months. So let's talk about what the moral of the story is here. So if you are looking to buy a house, you might get a slightly better deal. Okay, you might even get under asking right now. You might not have to compete with a bunch of other people. You are going to pay more than you did last year. But if home prices continue to actually go up a little bit, wouldn't you rather buy now than later? So there's a lot of people on the fence. There's a lot of people waiting, thinking prices are going to drop. Situationally, you may get a better deal, but don't expect overall a house that's worth 600 to go to 500. And if you're a potential home seller, so just know that you're not going to get likely as many offers unless you price your property slightly below market value. Okay, there's no more pricing ahead of the market. There's no more trying to stretch and get every last penny and price high, unless your house is a 9 or a 10 out of 10 on the market compared to everybody else. So don't worry, you're not going to sit on the market for months. The difference literally is maybe a week, maybe days, but it is really critical to price now appropriately more than ever. So listen, that was a ton of information, but I'm here for you. If you have a question, you're confused, feel free to reach out to me. I'd be more than happy to break down the situation and give you some sound advice.